I saw a CPI number that I did not like at all from the core, 3.1%. And everyone was like, okay, now the Fed could cut by 50 basis points. I'm like, I thought Powell had a much stronger argument, not much stronger argument, but I think Trump had a much stronger argument. You had a much stronger argument like months ago, like the last 3 months before this with CPI, PPI data, unemployment data, that you should be cutting. And now with this data that came out, now I feel like that pendulum has swung into the camp of Powell and Powell saying, hey, you know what, let's see what happens with the tariffs first, because the PPI was a disaster, the unemployment was a disaster, right? So it's like, okay, well, the employment, if it gets to be a disaster, we should be cutting, but it's all about inflation. We're seeing inflation numbers go up now, and maybe it's a one-off or whatever. I just think like now you're going to cut 25 basis points, which is a given in September. People were hoping for a 50 basis point. What I'm saying is going forward, until he leaves office, which is May, which is Powell, I think the market was factoring in 3-4 rate cuts, and we may only get one by the time he leaves in May right now. Because if we see another high inflation PPI, CPI report, it's going to take all the cuts off the table. The market's not pricing that in. We mentioned yesterday, we could see money coming out of risk assets. We could see money flowing into the nations that have cut, which is just about every single nation outside of 3. There's like 50 of them, developed nations and emerging markets that have been cutting rates this year. We haven't cut rates this year. Last time we cut was in December. So we haven't been cutting. We've been late to the party. Now it makes it more harder to cut, I think, going forward. And the market is pricing in lower rates. Even mortgage rates have come down a little bit. But you see this risk-off environment, because if the inflation numbers are high next month when they report CPI and the PPI, I think we're one cut, and that's all we're going to get probably for the next 3-4 months, at least 5 months. And that's not priced into the markets. Maybe that's why you're seeing risk off. It's just 2 days. We're up a ton on so many of these names as well. So the pullback is expected. However, I wouldn't jump the gun, but I just really didn't like those reports because the market was assuming a lot more rate cuts going into next year. And I think it's going to be a lot less than what everyone thinks, especially if we see inflation continue to go higher in a CPI and PPI report.
Yeah. And we've talked about trueflation. We've talked about inflation is ticking higher. And I think that's why President Trump wanted the rate cut to already happen. There's going to be a bump in tariffs. It just depends on what percentage of the price hikes the consumers end up paying versus producers, exporters, whatever. The other thing to that, Frank, is you always have to pay attention to the narrative. And you don't want to listen so much as to what they're saying, but about what they're saying. And what I mean here is we've gone from no inflation to where maybe inflation's ticking up, maybe it's transitory, maybe it's a one-off. But now a couple of the front runners for the Fed chair, Frank, are talking about the balance sheet, and now you got to focus on unemployment and all this kind of stuff. Listen, talk about front running, Frank. What happens Friday? Who gives a big speech? Who puts on his ugly suit and pointy shoes and gives a speech out in beautiful western Montana state? Not Montana, Wyoming. Same thing. Fed Chair Powell. I am crazy enough to think that the market has to be front running Powell a little bit because, and I want your opinion on this, there is, and I'm going to eat some crow on this, there is no Florida way, in my opinion, Powell comes out and has a good speech on Friday. And when I say good, I mean, if he doesn't hammer inflation and Donald Trump, I would be surprised. I hope that I'm wrong. Maybe the market rallies 2.5%. I would take the other side of that because I look through the lenses of politics and economics. You don't have to. When I see people disdain or hate one another and you don't think that affects their job, I just agree to disagree. There is no way I expect a dovish Powell. And now, to your point, until, I think it's, don't hold me to this, I think it's September 9th. In September is when the revised jobs come out, a big revision jobs come out. He's got clear sailing till that report comes out. And you have inflation actually ticking up. Even if you look at the outdated, silly Fed data, it's going up. But trueflation, which we've talked about, which is more up to date, it's clearly ticking higher. And I think markets are always, we know that markets look ahead. I just don't see how they're not looking ahead to Friday. I'm not saying stocks can't go down Friday. If he comes out with a hawkish tone, Frank, there's a boxing match going on and Powell is throwing haymakers, in my opinion. What say you? Am I crazy on that, or give me your thoughts on Friday's speech in your opinion?
I don't know, Friday's speech, Jackson Hole thing. All I know is I wonder if there's an indication between the escort prices that they have there, because they always cover that in the New York
You're
Post.
talking about
Davos and Jackson Hole, right? So it's kind of like the same that the Post always reports on that, how much they're actually making. And I want to know if that has a reflection of the economy, what the economy is going to do. But apparently they're making very, very good money there with all the private jets and everything flying in and stuff like that, so, which is cool. And I love talking about that because it's so true. And nobody wants to talk about it, except for the New York Post. I give them credit. But I don't know what he's going to say in this speech. I just think he has the ability to say, I told you so right now. And that's going to be interesting because if he says, I told you so, that's hawkish. And that means, hey, we got one cut, but we're not going to cut for a while. And I think that's a speech we're going to get. And I think that's what the market is pricing in now while we're selling off on the risk asset prices and stocks and stuff like that. I think he's going to be much more hawkish. He doesn't care. He's gone in May. Everybody knows that. But you could have made the case for 3 months ago, 2 months ago, 1 month ago that you should have been cutting. And we made the case you should be cutting. Right now, based on the numbers from the CPI and the PPI, I'd be more cautious. You cannot even go close to a 50 basis point cut. It's going to be a 25 basis point cut. That's what's factored in. Usually you don't see these massive surprises when it comes to cuts from the Fed. They like to be transparent about what's coming. This way they don't shock the markets. But I think the shock in the market's going to be like, hey, we're just going to wait because these tariffs could get worse. We finally saw it. We're seeing it among companies. Prices are going higher. And let's see what happens in the next month because we could go higher next month. And I'm just telling you that the market is really pricing in lower rates, huge deregulation, more manufacturing jobs coming to the U.S. All this shit works with lower rates. You don't have lower rates. None of it works. The housing market doesn't take off. You don't see massive consumer spending. You don't see loans. You don't see the business trend continue where IPOs and SPACs are getting funded like crazy. All that stuff is going to come to a grinding halt if we keep interest rates higher. And it looks like they're going to be higher longer, especially if that CPI, PPI come out. So just take a look at that. And that's why you're probably seeing, this cautious tone.